Hey everybody, welcome to the garden. I hope you're having a great day. Shout out to the lemon and lime lovers and everybody in between. Today we're going to be looking at a topic that I believe is extremely important for trading and will bring about extreme value for anyone with a small or large account. And if you don't know about compounding interest, well, hopefully this video will enlighten you. So let's hop right on into it. I'm gonna read a quote from someone who's far smarter than I. Compound interest is the eighth wonder of the world. He who understands it earns it. He who doesn't pays it. Albert Einstein. Pretty much what this means is, essentially, if you do not know about compounding interest, no matter how successful you are, someone out there who does know compounding interest will be more successful than you. Period. End of story. If you are trading without using the tool that is compounding interest and applying it to your trading, you are not making as much money as you could, and you are not saving yourself loss as much as you could. So as we go further into this video, I'm going to give you a visual representation of what exactly that means. I've done this topic slightly in a previous video called How to Make a Trading Log. At the end of that video, I do go over compounding interest, but I don't really focus on it too much. This video is exclusively for compounding interest, but if you do want to understand how to make a trading log, then please watch that video, as I'm going to use a trading log to display the compounding interest, and it's the same template that I showed in that previous video. Okay, so on to the next thing. So here we are. Compounding interest, when applied to trading, allows your account to increase rapidly, but also protects your account from decreasing rapidly. So compounding interest, I think most people understand it as some way to make a lot of money from a little money relatively quickly. But what's really cool about it, at least in when it applies to trading, is that if you apply the same rules to your growth to when you are losing, you will actually find that you will protect your account by decreasing your trade position size relative to your total account. Again, this will be displayed in the log in just a few seconds here, but this is, in my opinion, the coolest part about compounding interest, is that it can really protect your account, and that's what's most important. Okay, making money is great, but your job at the end of the day is to survive the markets, because if you can survive the markets, focus on your process, the end result will take care of itself and you will make money. All right, and this tool helps with that. On to the last part. Compounding interest applied to your trading inherently creates discipline and risk management. And this is so true. If you apply the tool that is compounding interest to your trading strategy, you will find that your discipline and risk management will be far heads and shoulders above everyone else around you if they're not applying this sort of tool to their trading strategy. And this tool works with any sort of trading strategy, whether you're a trend trader, range trader, scalper, does not matter. If you're an investor, compounding interest works. End of story. And it is better than most, if not all, risk management strategies. I do not believe there is one in this world that is better than compounding interest. I could be wrong, I may not know, but as far as I know, compounding interest is the best, because not only does it protect you from loss by decreasing your risk and your exposure, but it also opens you up for the most possible gains in the safest way possible. And let's go over that now. So let me give you a visual representation of that. So here we are. So as you can see, there's a trading log. You're just using Google Sheets. The template, I go over it in that previous video I mentioned, how to make a trading log. So if you want to understand that, make sure to watch that video. This is a total of 26 trades. It's all on Bitcoin. Again, these are not real trades. These are just mock trades I made up. And I made sure that I wanted it to be as if you're spot trading, just to show that you don't need to use leverage to have rapid growth. Leverage, of course, can enhance that, make this even faster, but you do have to remember that the leverage will change the math a little bit, in that previous video that I have mentioned now twice, I do go over it with leverage. So if you want that example, just make sure to watch that video. This example is mainly just going to go over how you would do it if you're spot trading, generally how you would do it if you're trading stocks, and just give you a very clear overview on how to apply this to your trading and what magic it does to your account. All right, so everything is long, so all the positions you take are long. There is no leverage, and the entry price is the price that you entered Bitcoin at the time. So as you can see, the first trade, Bitcoin's $10,000. Okay, this middle section here of the entry date to the contract quantity does not matter. It's not relevant. Okay, we are starting with a $10,000 account size, and we're compounding that account 10%, and I'll explain that in just a bit here. Okay. So the WL ratio set is the win-loss ratio set. So this keeps track of how many wins and losses you have consecutively. So however many wins and losses you have in a row. And then your final P&L, profit and loss, is how much money you made or lost in the trade. And then the cumulative money, cumulative dollars, is how much you've made in total. So add it up. So 200 from the first trade you made. Then the second trade you made $204. 200 plus 204 equals $404, okay, and then so forth. Hopefully that makes sense, okay? And then the end balance is essentially how much you have at the end of the trade, right? So our account started at $10,000, sorry, and then after the end of the first trade, you made $200. So now your principal with net profit is $10,200 total, okay? And then because you're only risking 10% of the account, all right, we're only going to be per trade opening up $1,000, right? So the first trade was $1,000. You made $200 from that $1,000 because Bitcoin moved from $10,000 to $12,000. That's a 20% increase. So you made 20% off $1,000, hence $200. Okay, and now because your total balance, your total account size is $10,200. You now will be trading with $1,020. Okay, so 10% of your account size will always be traded for per trade. All right, and that's where the magic happens. So as we go forward, I'm going to go through each trade. I know it's going to take a little bit, but I want to make sure this gets through, because I believe that if you're not applying this to your trading already, you're leaving money on the table, and you're also exposing yourself more than you have to. Whatever strategy you have for risk management, I assure you, this is better. It is most likely better. If you have a better risk management strategy than this, I would love to know about it. But I can tell you, after many years of trading, this is the best. Whether you have a small account or whether you have a big account, this is better than what you do today. Okay? All right, so second trade, you made $204. Cumulative dollar amount, you made $400. You have $404 now, and now the total balance is $10,404. So 10% of that is $10,040. So we're going to be trading with that for the third trade. We make money on this trade as well. So now we have 3 wins in a row. Bitcoin moved another 20%. As you will notice, every move in Bitcoin from the entry price here is a 20% move. The reason why I decided for every trade to be 20%, because I want you to see that in the most hectic, volatile market you could imagine, compounding interest, this tool protects you and exposes you to both, it protects you from downside and exposes you to the most gains you could possibly get to the upside. That's relatively safe. Okay, so again, you're not going to have 26 trades, each being 20% in movement consecutively. That's extremely unlikely. I damn near say impossible, but anything's possible. But it's extremely unlikely. But this shows you that this strategy, even in this environment, would still protect your account. All right. So in the third trade, we made $208, and as you can see, we're making $4 more because we're exposing our account a little bit more because of the compounding interest. And now total, we've made $612, so that's about 6% of the $10,000. So we're at $10,612 total, and now our trade balance is going to be $10,061. Okay. Now we get to our first loss. Okay, Bitcoin falls 20%. So from 14,400, it fell 20% to 11,520. And now we lost $212. We're still in profit overall on our account. So we deduct $212 from 612, bringing us down to a profit of $400. Okay, and now we're back down to a total account value of 10,400, and now we're back down to exposing our account per trade $1,040. Okay, so we fell from 1,061 to 1,040. So now you should be seeing what's happening. Okay, so we were increasing our size as we were going up by 10%, and then we're decreasing our size by 10% as we go down. And that's where the protection really hits. So the next trade is another loss, another 20% drop. We lose $208 in that trade, and now we deduct 208 from 400. We're down to 192. Okay, and now the total account is 10,192, and now we're only exposing $1,019. All right, so that for our next trade, $1,019 will be exposed. And in the third trade, we're going to finally, lose our principal, some of our principal, and we're going to be in the red officially for the account. So we lose $204 on that trade. And as you can see, as we were gaining $4 per trade, in profit, while we're losing, we're actually decreasing our loss by $4, right? So we lost firstly 212, secondly we lost 208, and then now we lost 204. Okay, and now we deduct 204 from 192, and we're negative $12. All right, so now we're at 9,988, and so we're going to expose $998 for the next trade. So off to the fourth trade. Now we lost $199, another 20% loss. We are now down total $211, because 199 plus 12, 211, and now our total account is 9,777. So what do? We expose 10%, which is $977. Fifth trade, down 195. Now total down profit loss 406. Now the account value is 9,582, exposing 958. Now 6 loss in a row, 191. Now we have a total loss of 597. Total account size 9391. Now exposing 939. Seventh trade loss 187. Total loss 784. Now total account size 9204. And now we're exposing 920. And now we have 8 losses in a row. Okay, this is an extreme. You should not be having 8 losses in a row. But look what's happened in the 8 losses in a row. Okay, 8 losses in a row, and you're only down 10% of your overall account. We lost $184 in that 8th loss. We're now down total $968, and now our total account size is 9,020. So you're going to be risking $902 the next trade. But you don't want to be in this position. But look how incredible that is. I can't emphasize how incredible that is, that you lost 8 in a row and you're only down 10% of your account. Really, technically less. You're really down like 9.6% of your account, 9.7% of your account. But the point is, if you weren't using this risk strategy, I guarantee you, most of you that are watching that aren't following this, 2 to 3, maybe 4 losses, you blew up your account. You blew up your account. You're either down 60, 70, 80% of your account, period. If you're saying I'm wrong, well, I bet I'm not. I'd bet I'm not. And that's why this strategy is better than whatever you're doing. Okay? Because yes, you technically can leave some money on the table that instead of, if you had $10,000 here rather than $1,000 and you made 20% off that, you would have made $2,000, not $200. But if you were trading like that here, when you lost your first time, you would have lost $2,012. Then you would have lost $2,080, $2,040. Like you would have just blown up your account after 3 or 4 trades. This way, you still have 90% of your account. 90% of your account. Like that is incredible when you look at it with the proper perspective. Now let's take a look. You're finally breaking that losing streak. You get that win. You bank in $180. This is another 20% trade. So your loss decreases from 968 to now 788, and so now your total account is 9200, so you're exposing 920. Okay, second win in a row, plus 184, now decrease the loss to 604, total account 9384, now you're exposing 938 per trade. Third trade, 187, 417 total loss, so you're decreasing your losses. Now your total account is 9571, you're exposing 957. Fourth trade, 191, now you're only down $226, and now you have a total account of 9762, and you're exposing only $976. And then finally the fifth trade, you won $195, you're only down $31, so now you're virtually flat, and now you're at 9,957 total, and you're exposing $995. It took 5 trades, guys. 5 trades to become flat. All right, that's incredible. That is absolutely incredible. All right, and you must remember these are 20% swings, so your trading should not and will not be this volatile consistently. Okay, and you should not be having 8 losses in a row. Okay, 1 to 3 trades in a row are actually pretty common, winning. But you should not have 8 losses in a row. And you're going to have some winners that are really big and some winners that are really small, but you should not be having any 20% losers consistently. So you're probably going to be making more than what you're seeing even here. But what I wanted to really emphasize, really portray, is that how stable your account is in this environment. If this were real, this is incredible. All right, this is pro level stuff right here. All right, number 6. You make $199. You're now up $168 total profit. Your total account is $10,156. And then the next trade you lose, and you go back pretty much to break even. You're down $35 after a $203 trade, and you're back down to risking $995. And then I show also what happens when you go on an 8 winning streak. So just like you went on an 8 losing streak, you go on an 8 winning streak. So first trade from the winning streak, you make $199. Second trade, you made $203. Third trade, you made $207. Fourth trade, you made $211, and all the way up to number 8, you made $228. And as you can see, you're making $4 extra on your wins, and you're decreasing $4 on your losses. That is the secret sauce. Okay, like that is what is giving you the growth with the protection. All right, and then you end up with a total of 11,659, and you would, the next trade you would be exposing 1,165. Okay, so this is after 26 trades. So after 26 trades, you would have been nearly up, let's just say almost up 20% of your account, but more like 16-17% for the account, for the total account from $10,000. All right, so hopefully this is very clear. All right, why this is so powerful. If you follow my Discord, you understand I'm also not compounding 10%. I'm compounding 1 to 2%, because every time I go into a trade, what do I say? Risk 1 to 2%. The reason why you want to do that is if you have a larger account, you don't need to risk as much. All right, you don't need to compound as much. So this is where small and large accounts can use and should use compounding interest, but large accounts do have the advantage that they can reap the same rewards a small account can with far less exposure. All right, so if you have a $100,000 account or a $250,000 account and you're going to risk 1%, that's anywhere from $1,000 to $2,500. And then if you make $50,000 in the year, when you do 1% at that point, then you're looking at, instead of a $2,500 position size, you're looking at a $3,000 position size. And you can just extrapolate that to small accounts. Okay, if you have a $1,000 account, not a $10,000 account, then you can change this trade balance to $100, and instead of $200 you made $20. Okay, just take off the last digit, and you're looking at what would happen if you're trading with $100 with a $1,000 start. All right, so no matter what size you are, this is valuable, and this is far more optimal than whatever you're doing. I can promise you that it's far more optimal than whatever you are doing. And this is the way, in my opinion, the safest way, the most consistent way you can get your account to that next level. All right. And this also protects you from losing strategies. If you have a strategy that's not profitable, it's hard to realize that if you blow up your account every 3 or 4 trades. Okay, because what happens is you're using a strategy that doesn't work, but you think works because it worked 1 or 2 times in the past, and that 1 or 2 times it worked, you made so much money. But now you're seeing, wow, I lose 4 or 5 times in a row, my account blows up, I have to refund it until I make that money back. You never end up doing. Well, in this case, you would be able to, slowly scale out. You'll be able to slowly scale out of that trading strategy because you won't be blowing up your account to as quickly as you would if you were not using this strategy. Okay? Because like I showed, you would have blown up your account at trade 3 or 4, whereas in this strategy you only lost 10% at trade 8. So please, 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 look into compounding interest. Start putting this tool to use for your trading or investing if you're investing as well. Research it some more. If you have questions about it, make sure to contact me via Discord. If you're not in my Discord, just check the link in the description below. It's right there. I'll definitely go over it with you. I love talking about it. If there's something you don't understand that I didn't go over enough, please reach out. And if I didn't answer a question or I didn't mention something, let me know, because I would love to talk about this again in the future if people want to hear about it. And yeah, make sure to join the Lemon Garden as well. We are killing it in both crypto and stocks this year. We've had 2 losers, for 1 loser for crypto, 1 loser for stocks, and we're approaching 80 trades combined. We've been on an absolute tear this year, so hopefully we keep that going. But if you want to be a part of that, we have free trades for the members almost weekly, sometimes bi-weekly, depends on how the markets are. But if you want all the trades, just check out the Patreon, the link in the description below. It's $15 a month. From everything I've gotten feedback on from members, everyone's making far more than $15 a month. So if you want to hop into that, make sure to check it out. All right, everyone, thanks for being members, and thanks for hanging out with me here. And always remember, be patient, be vigilant, and be nimble. Love you guys. Take care.